To banks, insurance companies, investment firms. The purpose for the software is to engage young families and millennials on goals, on their financial goals, knowing that that demographic does not qualify to work with a financial advisor because most advisors have asset minimums. And so what you see here is essentially the timeline of a young millennial couple. Just call them John and Lisa. And the system already knows, based on their demographic, what goals they should have. So everybody will have retirement. That's on the timeline. And if you have young children, college will automatically be created. So you don't have to create those goals. There are other goals, obviously, that you have to tell us. And so here we have a menu of goals from, planning to have another child, car, education for more older, millennials going back to school, obviously house, which I already created here, but I'll show you how we create another goal. And then one of the unique things about iQuantifi, I spent 18 years as a financial planner, investment advisor, and I've always been trained on the big goals like retirement, college, and we've been able to figure out how to properly put in, based on financial planning priorities, what we refer to as millennial goals, such as rent, knowing that a third of millennials still live at home. I'm sure their parents are more than happy to help them, with this goal. Relocation. Millennials not going to necessarily work for the same company for the next 30 years. They're much more mobile, going after the next career opportunity. And then engagement ring, in that a lot of them are holding off starting a family because of the student debt load that they have. And then you have travel and also wedding. And the other thing that iQuantifi also does is very intuitive, is that you don't have to tell us how much cash reserves or emergency fund you need to build up. That's already created for you based on your expenses. And it'll tell you then, make recommendations on where to position these, assets and so on. And so it's very intuitive. And the point here, from a licensing standpoint, is that the institution's product will be recommended in here, labeled, based on the institution's offerings. Then same thing, with disability, based on the income, it'll recommend not only the amount, and so what you will see here are 6 patents coded in, one of which is called the product structuring. Product structuring is where it structures specific products recommended to the user, in this case disability insurance, not only determining how much, but the type, whether it's own occupation or any occupation, the waiting period and the duration. And so it's very much suitable to that specific user. And same thing with life insurance, where it not only determines how much, but also makes recommendations then on the type of insurance. So if we're licensing this to an insurance company, it'll say apply for, let's say USAA's 30-year term life insurance, branding it, thus then this becoming an active button, routing the user directly to that insurance company site where they apply directly for that product. So it's providing advice and the products, bringing the consumer and the institutions together the right way. Now the key part to iQuantifi is the advice. And so this is our action list, and you can filter it based on protection in terms of cash reserves, debts, showing, giving you recommendations on how much you need to pay to get it paid off within a period of time, and the goals. And so the advice for goals has 3 components. One is the funding, knowing how much you need to save. And the key here is that iQuantifi never provides advice to save $900 towards this, unless it knows that you actually have that. Otherwise, it'll create a shortage in your cash flow and sends you then to our cash finder, another feature. And so the fact that it's recommended this means that you actually have that money. We don't budget at iQuantifi, we accomplish goals. That's, people budget because they don't know how much they need for their goals, thus then try to figure out where they should cut. Well, iQuantifi does all that for you. The second part then to the advice is the product itself, recommending what is the most suitable product based on the time frame, and also we have a little educational component here as well. And the last is the investment itself. And so what I will point out to you is pay attention then to the amount recommended for the house, as well as the product type. And the timeline is dynamic in that you can scenario plan. So John and Lisa say, well, what if we were to move up our goal, say by a year, can we get that house? And so the system recalculates everything, determining can they in fact move the house goal up, asking them to save it, and there's no shortage here, so they go back then to the action list, and now instead of a brokerage account, it recommends a money market because of the time frame, meaning it's more suitable that way, and also recalculates them the needs right there in real time, knowing that people don't make financial decisions Monday through Friday 9 to 5, and so here they're able to get that advice in real time. The other thing then to point out is that when it comes to longer term goals, there's asset allocation already embedded in here. And so when John created the account, he stated that he has the most experience with ETFs. And so even here, you can click on it and routes you then to iShares a site specific to that fund, getting more information. But then Lisa says, well, hold on, I actually have more experience with index funds than you, John, and reflects that on their investment experience. And essentially, in real time, the system takes that into account and now recommends index funds. And so it's able to take into account changes that the user makes in real time. Let me then add another goal. So we're gonna take the house back here real quick to where it was previously, so that everything works based on the demo, based on our assumptions. So now, John Lee say, well, can we in fact get a car later this year? And there are just few assumptions that the user needs to tell the system, and so they want to put about half of it down as a down payment, and now the system calculates can they not only get the house and save for college retirement, but also add a car. And simply by saving it, and there's no shortage message here, now then it reallocates their cash flow and assets in real time to try to make it work. And so far, the system's been able to address all of those goals. And the other thing is about the product structuring for the institution is that it gives the institution line of sight, knowing that in about 2 years, they're planning to buy this house, and the product structuring technology already has structured the mortgage, knowing that they can in fact afford a 15-year, that $1,900 a month payment is within their cash flow. And so that gives the institution almost 2 years lead time figuring out a way to get this particular customer to apply for their loan by providing whatever incentives and so on. And so that's the value that iQuantifi provides, is the advice, and simply then matching it up to the right financial product that institution provides to their own customers. So it's a lead generation, demand generation based on our decision engine. And the last thing I will show you then, let's see here, is our app is based on responsive design, and so by shrinking the browser, this is essentially what you see on the mobile and the iPad, since I'm not hooking up my iPhone to here. So hopefully you'll see how simple it is to use, how intuitive it is, and also it provides good advice. It doesn't sell products just for the sake of selling. It actually helps to accomplish people's financial goals. Questions?